Forget about what everyone tells you on X, Instagram, and YouTube about how to make money with stocks and stock options. If you want to learn how to make millions of dollars in a stock market and with stock options, you have to learn from someone that's already done it. So me, myself, I went from $0 to over $2 million of net worth in just a few years, and I generate over $30,000 per month. Yes, every single month doing stock options the way that I do it. So in this video, I'm going to walk you through everything you have to know, exactly how I trade stock options, how I scaled my portfolio so fast, and how I get that ultra valuable cash flow. You see, so many people, they want to do stock options, they want to make millions of dollars, they want this monthly cash flow, but most people end up getting smoked, they lose everything, they just have no success. And honestly, I'm not surprised. Most people will probably lose money doing stock options. But if you watch this entire video, there's a very good chance you're going to be on the other side of the equation with stock options, where stock options could retire you so much faster than what you actually think. So first, we're going to bust a few of the most common myths around investing in a stock market and stock options. So most people are going to say you need to have a bunch of money to get started in a stock market. The answer is 100% absolutely not. The next thing that people are going to say is you have to take a bunch of risk in order to make a bunch of money in the stock market. Totally wrong again. And another big myth is most people either come to this video because they want to learn how to do stock options the right way, or you probably went and tried it on your own and you lost a bunch of money doing it. And another thing that people are going to say is, oh, well, if you do stock options, you're basically day trading all day long. You have to be staring at your phone all day long. You have to watch if the stock goes up, goes down. And then when you go to sleep at night, you're going to be losing sleep over, oh my God, is my stock going up or down after hours? You don't want to make trades like that. The way to do stock options in the easiest way to make money, scale your portfolio, not lose sleep at night, and do this in a safe way is my strategy, and that's exactly what I'm going to teach you in this video right here. And another thing that's probably going to blow your mind is that 95% of the options trades that I make, yes, 95% are profitable. 2024, my return was 96%. I almost doubled my account in 2024. 2023, my return was 75%. Yes, almost another double in 2023. And guess what happened in 2022? The NASDAQ peaked out and it took a 35% dip. Guess what happened to my portfolio in 2022? I was essentially flat. But guess what I was doing in 2022? I was capitalizing on this dip right here, and this bounce that happened right here, this bounce right here made me millions and millions of dollars. There's a lot of people out there right now, and I do kind of agree with them, saying that the stock market is overvalued right now. Maybe the stock market's going to crash. What are we going to do if the stock market goes down? Guess what? If we get a stock market dip in 2025 or 2026, guess what? That's going to be just like another 2022 for me, where I capitalize on the downside movement, I get good discounts, I make a bunch of really good option plays to capitalize on the next bull market to come. That is how I made millions and millions of dollars in 2022. You make the most of your money when you buy. You don't make most of your money when you sell. If you buy right, if you do the right option plays in a low risk way, you will make money in the long run. So we're going to go through everything you have to know in this video right now. So let's get into the details. So the main reason why most people lose money with options is because they think of investing in options as literally doing options itself. That is the farthest thing from the truth. And you're going to be like, Brandon, if you're investing in options, you're doing options, so it's all about the options. No, it's all about what the underlying security is doing. So if you're doing options on Apple or Nvidia or AMD, it matters what that stock is going to do, and then you're going to use options to capitalize on that movement. Because if you think AMD is going to go up, but it actually goes down, if you happen to go buy calls on AMD and it goes down, you're going to get totally wiped out. So you have to understand not how to do options, because options itself, I could explain to a 12-year-old how that works, how to buy a call, how to sell a put, how to sell a call, how to sell a put. All that stuff is pretty basic. We are going to briefly cover that in this video, but the key of this video is to show you the right way to utilize stocks and stock options to magnify your returns. It doesn't matter about the Fibonacci, it doesn't matter about the moving average, it doesn't matter about the Bollinger Band. And yes, I do a little bit of technical analysis, but the majority of my options trading strategy, you don't even have to do that stuff. I'm going to show you something that is way more predictable, way more easier to consistently win your plays year after year after year. I pretty much consider this like swinging for home runs versus swinging for base hits. If you're trying to swing for home runs every single day, you're going to get a couple home runs, but you're going to strike out way more. So when you go do these ultra risky plays, or maybe you go buy call options right before earnings, you're probably going to lose doing that strategy in the long run. Or you could do my strategy, where I'm hitting first, second, third base hits all day long, with low chance of losing. Remember, I told you earlier in the video, 95% of my plays I make money on. So if you could do that year after year after year, your portfolio will scale so much faster than it feels like you're going up and down and up and down and up and down when you're swinging for these home runs every single play. So let's get into it. So you might be wondering, well, if you don't look at the chart, what do you look at? And I'm going to ask you a question right here, and it's probably going to blow your mind once you really realize, okay, that does make sense now. So let's say you go online and something pops up, there's an ad for a landscaping company that's for sale. You say, okay, I might buy that landscaping company. Ask yourself this question right now. What is the first thing you want to know about the landscaping company? You're probably going to say, how much is it? How much is the total company to buy? Yes, that'll be my number one question too. But then your next question is going to be, okay, if I buy it for $1 million, how much money does the business make? What are the profits? That is the next most important thing. So if you could understand that this landscaping company, maybe you could buy it for $1 million and it makes $1 million per year in profit, that's a pretty good investment. But what if you buy that landscaping company for $1 million, but it only generates $1,000 per year in profit? That is a big difference right there. And you're probably going to be like, dude, I don't want to spend $1 million to only make $1,000 a year in profit. That's not worth it. So when you go to make an investment in something, you have to understand, what are you getting for the price you're paying? If you buy the landscaping company for $1 million, how much profit are you going to get? And the same goes to when you invest in a stock market. So let me ask you this right here, and then we're going to go into the nitty gritty of how I make $30,000 per month and how I scale to millions of dollars. So Nvidia right now is roughly $145 per share. I think we're in the beginning of a massive AI and tech revolution that's going to last for years going into the future. I do think it might be a little bit of a bumpy ride, but I think we're just getting started in this AI and tech revolution. But I think that Nvidia is going to be a massive, massive player in this industrial revolution, but just for tech. Let me ask you this right here. Do you think Nvidia is going to be a bigger company in 1 year from right now? Are they going to have more profits? Are they going to have more revenue? Me, myself, of course, I think Nvidia is going to be bigger. I think the demand is only going to get stronger. So Nvidia is trading for $145 per share right now. What if I told you that 1 year from right now, you could buy it for $120 per share and get paid $30,000 to do it? That is how I do my option trading strategy. That is how I made millions of dollars. That is what we're going to go into in this video right here. I can buy Nvidia for $120 per share 1 year from now, and I got paid $30,000 to do it. That is the exact play that I just recently made on Nvidia, literally the exact same thing. I got paid $30,000 to buy Nvidia for $120 per share a year from now. You probably just said in your head you would maybe buy Nvidia for $200, $250 per share a year from now, because we just said we think the company is going to get bigger going into the future. So $120 per share, and you got $30,000 to do that. Why on earth would you not want to do that? It's a great deal. And on top of that, when I did that option contract, that $30,000 that I said I got paid to buy them for $120 in the future, I got that $30,000 credited to my account immediately. So I could go withdraw that $30,000 and go blow it. I could go reinvest it and buy more shares. I could do whatever I want with that $30,000. And I also did this on Tesla too. So let's go into my Charles Schwab account, the one I just showed you a little bit ago that had $950,000 in it. And we're going to go through this exact Tesla play right here, how I made $30,813. I get that credited to my account immediately, and then I could go do whatever I want with it. So this is my strategy. This is how I generate $30,000 per month on average. And by the time you're watching this video, I might be at even $40,000 or $50,000 per month by the time you watch this. So this is all key information, and I'm going to show you right now how I do the strategy, and then I'm going to give you logic behind it to really make you understand why I feel like this is the hands down best strategy that you could do. So Tesla right now is roughly $410 per share. So what I did a few months ago was Tesla was beat down. The stock was a lot cheaper in price. And when I feel like stocks that I'm okay to hold for the long run are beat down in price and they're trading below intrinsic value is just truly what I feel like a company is worth at the moment. So a few months ago, I feel like Tesla was trading below intrinsic value. I'm okay to hold it for the long run. And I feel like the company has a durable competitive advantage going forward. A durable competitive advantage is basically saying you have pricing power, you pretty much dominate the competition, and essentially if you want to raise your prices, people will still buy your product. I feel like Tesla has that, and there's a ton of companies that have that too. If I were to scroll down, which I will in just a second, I do this on a bunch of other companies and ETFs too that I feel like are trading below intrinsic value that meet all my metrics that I'm trying to do it for. So Tesla, I sold puts on it. So what that means is when you sell puts, someone else on the other side of the trade is buying puts from you. So every trade that you do in the stock market, there's a buyer and a seller. I am the one selling the puts and someone else is buying the puts from me. So when I sold 10 contracts right here of the 170 strike price put with an expiration date of 6/20 of 2025, the person that paid me $30,813, their basic logic behind this was they own shares of Tesla and they are scared that Tesla is going to fall below $170 per share. They're scared it's going to go down. I don't think it's going to go down because I felt like it was already trading near intrinsic value. So I felt like the stock was going to continue to trend up going into the future. And guess what? It did. So as long as Tesla stays above $170 per share, this option contract right here that I sold will expire worthless. Because think about it. Buyers always want to buy for the cheapest price and sellers always want to sell for the highest price. So if Tesla right now is trading for $410 per share, why on earth would the guy that bought this put contract from me sell his shares for $170 per share when the current market price is $410? You would never do that. He would just go sell them in the open market and realize that this option contract he sold right here, it's a worthless option contract. So what happens? I collect this $30,813 in premium and I could do whatever I want with it. So usually what I'll do is when I get the premiums when I sell these puts, I'll buy more shares of VOO, Triple Q, or individual stocks. So at the time of recording this, these are the only things that I own in this Charles Schwab account. The rest is a bunch of option plays, which I'll scroll down in just a second and show you that, because there are some interesting ones in there that I feel like you could do right now still that really would make some money. Now, I know you guys probably scrolled up to the top here and saw this right here, that my cash balance is actually negative $7,284. And you are absolutely right. That is just honestly my fault. It's a rounding error. When I do option plays throughout the day, sometimes they overdo it and I go on margin by a little bit. So to clear this out, I'll just sell a little bit of my shares, either a VOO or Triple Q, and this will be even. So this is no big deal. But the point I'm getting at right here is I don't have cash in this account. So I am selling this put right here, generating $30,000 in premium. This premium, when I sell it, will go from right here and it'll pop up in my cash balance right here immediately once I do the contract. And you're going to say, how do you sell these puts without having cash in your account? So the way that I do it is you got to look over here on the right hand side. So do you see this thing called margin requirement right here? It's $36,040. So what this means is Charles Schwab, and keep in mind, this is broker specific, and I know a lot of you guys use Robinhood, and Robinhood is not going to let you do this, and I'll explain why in just a second. But for Charles Schwab, in order for me to have this trade right here, I am required to have $36,000 of equity in my account. So if you look over here, Triple Q, Tesla, and VOO, this is worth $415,000, $205, and $332. So I'm only required to have $36,000 of equity in this account to support this put that I sold right here. Now keep in mind, this margin requirement moves in real time throughout the day. And think of the margin requirement, like how it fluctuates up and down throughout the day, as a function of how likely this contract right here is going to go into the money. So if Tesla were to tank in price, getting closer to 170, which is the strike price right here, this margin requirement is going to go up, because technically speaking, if I go in the money on this, I'm required to buy 1,000 shares of Tesla because I sold 10 contracts, so that's 100 shares per contract. So that's 1,000 shares times $170 per share. I'm on the hook to buy $170,000 worth of Tesla stock on 6/20 of 2025. So how am I going to do that? One of three things will happen. I'll either have to send $170,000 to my Charles Schwab account because I'm on a hook to buy 1,000 shares. Because 10 contracts and every contract is 100 shares, that's 1,000 shares times $170 per share. So that's $170,000. Now I know a lot of you guys are going to be like, dude, that's crazy. You don't have any cash in your account, so how do you take assignment? So I'll either send $170,000 of cash to my account, or I'll sell shares in the base of my portfolio right here to raise cash, or I will take assignment of the shares, and then I'll do a thing called the wheel strategy, where basically I'm just going to sell calls at a similar strike price to what I took assignment at. And as long as the premiums that I receive by selling calls is more than the margin interest that I'm accruing, I'm going to come out ahead. And keep in mind, like I just said before, Tesla right now is $410 per share. Who on earth would not want to buy Tesla for $170 per share and get paid $30,000 to do it? So if Tesla falls all the way down from right here up on the right hand side, all the way down to a similar price level of right here, like $170 per share, of course I'm going to want to take assignment of those shares because I'm getting them at an ultra high discount, and it's a very good likelihood that those shares are going to rebound and go up into the future. And on top of that, I got this $30 per share premium. So 1,000 shares times $30 per share, that's where this $30,000 comes into play right here. So really my effective cost basis on these shares will be roughly $140 per share. So going from $410 per share right now all the way down to $140 per share, that is a super discounted level. And of course, I would want to do that. Now remember, I'm only going to sell puts on companies that I'm okay to hold for the long run. Here's an exact reason why. So this is BlackBerry stock. It did a huge pump back in the 2008 period, and then it went down. The reason why it went down is because the iPhone came out and it totally wiped out all the legacy phone makers in the past. So imagine if you were selling puts on BlackBerry and maybe you were up here on the top and then it took this huge dip and you're like, crap, I'm going to sell puts because it's at an ultra discounted price level. So right here, BlackBerry is at 36 bucks per share, but look at what it's trading for right now, $3 per share. So you only want to sell puts on companies that you're okay to hold for the long run, that you feel like are going to be around for the long run, because if you get assigned these shares, you want to be sure that you have a margin of safety, and when you're being assigned for a super cheap price where there's a high likelihood that that stock is stretched down so far that it wants to revert back to the mean line of growth and it'll rebound higher. So you're probably not going to have to sit on those shares for too long if you do get assigned those shares on margin. Now people are going to say, well, when do you buy calls? So the problem with buying calls is you have to be right and the stock has to go in the direction that you want it to go, which is up when you buy calls in a very short amount of time. Because the thing that we haven't talked about yet is the time value of these contracts. So let me just ask you an example right here. Let's say you're going to go buy car insurance. Let's say you want to buy car insurance for a 1-year policy or a 10-year policy. What policy is going to be more expensive if you were to able to pay in a lump sum for 1 year or 10 years? It's going to be more expensive for the 10-year policy because there's more time for something to happen in 10 years instead of 1 year. So if you go buy a call option for maybe a 2-month duration, every single day that the share price is not going up, there's less time left in that contract. So that contract is going to go down in value because there's less time, which means it's less likely it's going to go in the money and be a valuable contract. Now, when you sell options, specifically selling put options, as time goes by, the contract is going down in value, but that is exactly what you want. So when I sold this Tesla put, I got this $30,000 credit immediately, but now that the share price went up and time went by since I sold it, I could buy this contract back right now for $2,000. So that's where you see my profit right here at $28,000 because I sold it for $30,000, I could buy it back for $2,000, and I'm up roughly $28,000. So when you sell options, time helps you, but when you buy options, time goes against you. So keep that in mind when you're buying options or selling options, and that's what I talked about earlier in this video where you're hitting for home runs or you're hitting for first and second base hits. When I'm selling options, I'm doing first and second base hits all day long when I sell the puts, but I will buy calls from time to time, and when I buy calls, I am swinging for home runs, but I'm usually only swinging for the home run when that pitch comes straight down the center, it's coming right down the center, and I could just blast it to the homer. That's what I'm trying to do. So you guys will probably still have questions after watching this video, so check out the link below. It's my course, how I go 100% into deep detail into the stuff right here. But if you also want to watch a video of how I started from $0 and went to $2 million, and just more about myself and my life and all the things I've done to scale that fast, watch this video right here. I break it all down for you guys, and I'll see you guys later.